Okay, I want to take today, and that way we can't say we're cherry picking, right? Certain scenarios. So we'll just use pretty much today's action, and it is currently 4:59. So the market is about to close here for its 1 hour break from one day to the next, trading day to the next. Um, I want to show again how can I frame a trade using these tools, right? With the benefit of hindsight, the same way we would do as if we were journaling. And let's use a concept by ICT with the first presented fair value gap. So what we'll do is we'll scroll over to the morning on the 1 minute chart. And our first presented is, we don't include that 930, which here on NinjaTrader 8 is the 931 candle. So the next one would be my first presented. And if I were to click that one like this, what happens is this is chained, right? The reason that it's chained is because whenever I come here to the settings, we see chain all imbalances is checked and detect volume imbalances, where it changes those also, because truly this is how this is comprised of. There is a fair value gap right there. There is also a fair value gap here, and there is a volume imbalance from that body to this body. There's also a tiny one from this body and this body. So if I were to scroll in, right, we can see those much clearer. So pretty much what the tool does is, with one click, it's pretty much going to chain all these together. Okay, so I'm just going to delete the fair value gaps really quick so we can see the volume imbalances.
Order canceled.
Sorry, this should not be here. All right, volume imbalance, volume imbalance. And now whenever I go again to that first presented, we get this. So that's how this tool works, the fair value gap. And we are drawing it in brown because that is what my preset is for the 1 minute chart. If I were to go to a 5 minute chart, this would be more of a tannish color. But we have our first presented fair value gap here. So how can we frame a trade around this? Okay. Again, this is not financial advice. This is not the way I trade, but this is just an example to showcase these drawing tools. So first presented fair value gap is pretty large, right? Actually, if we cut here, we can see that it is 182 ticks wide, and there is a notional value of $910 in here, where price is currently right here at the 26622 level. From the bottom, we are 168 ticks, and from the top, we are 358 ticks away. So very useful information. What we can do is we can come in here and put our quadrants. We could also, if we wanted something else, for example, we could have a preset that says FVG, which is first presented fair value gap. The start time, right, from 9:30 a.m., right, that's the first candle. We can, the end time is not going to be so important to me on this one. The risk, in case we want to click away, we want that to be in frame all the time. So the quadrants that we have drawn, right, what happens? We come down, we don't quite respect the midpoint here, but once we cross above it and come back into it, notice that we treat it as a form of discount. Then eventually we go well above it, we close above it with this candle, and then we come back down into that consequent encroachment, which is the midpoint, and we also respect it with the bodies. And notice how much it held. Okay, eventually we do cross below it, and then on the move back, we treat that as premium, right? This candle high is very, very accurate, right? Maybe that's what, one tick maybe from the midpoint. Then eventually we come back below it, and then we use the first quadrant again, and we pretty much sell off from there, and that kind of holds us lower for the rest of the day. As we see, if we were to extend this all the way to the right, extend right, that way we can have the text here no matter where we scroll, right? Midpoint holds this beautifully again and again, right? So this is a really tough area for us to get above. So how can we frame this, right? If we were to use, if we were to see something like this right here, after we drop this with displacement, and then we come back up and use this as premium, I'm going to look for an order block somewhere up here so I can take a trade off of it. So what I would do is I would look at the order block tool, and I would click this single candle here, which is a bearish fair value gap for me. And I would actually draw this to the, I would adjust this to that high. And notice that we come up into it, and that's what keeps us from going to the upper portion of this, right? Which is the candle before that order block, this high. So this high is pretty much, in other words, a protected high. So we can even put that in here. Set text for a custom text, protected high. From there, we can capitalize on a pretty good move, you know, something simple, targeting what would have been low of day. And we can even set that as LOD, low of day, right? Very quick and simple for marking up charts. Imagine not having these tools during a trading day, and this is the way you're analyzing, right? Time is money pretty much. You want something quick, you want something efficient, something you don't have to think about. And that's the beauty in this package of drawing tools, that everything just works together. It's not like you're taping a bunch of stuff together, a bunch of indicators from random sources, right? This is all one package, and they look like they belong together. They work and feel like they're all from one package. So yeah, we would pretty much use that. Then what we could do is we can actually frame that trade with the position tool. So this, assuming that this would be a protected high, we could take that. We could wait for us to hit the order block and inverse something like a fair value gap, or we can play a bearish fair value gap, such as this one right here, right? If we wanted to play this fair value gap, we could. And that's all up to the user. Again, this is not trading advice, but it's just showcasing how we can frame trades with ICT concepts. So the entry will pretty much be at that fair value gap whenever we touch it. Yeah, we close above it, but it's fine. We have our stop that, again, protects us, and we would target this here. Let's put the quantity. So we have a quantity of one contract, risking $685 to make 1,790 for a 2.61R. So that to me is actually a very beautiful trade. Simple, all framed around ICT concepts, aided by the drawing tools by VC and ZN.